Sakshi, Sakshi. I am Venky, and this is my show, The Fund Factor. Today, we're going to be speaking about whatever is going on in the United States of America in relation to the PPP, the Paycheck Protection Program, and the EIDL, the Economic Impact Disaster Loan from the federal government of the United States of America. It's a continuation of what we did last week on the same topic, and we received a lot many more questions from our listeners last week, and we have a specialist today who's going to be discussing with us and answering some of your questions. And the person I have with me live on the show today is Ramit Arora. He's the president and co-founder of Biz to Credit, and he heads the company's credit and sales operations. He has more than 10 years of experience in financial services with Citibank and Xerox, and he also has considerable experience in risk management. So Ramit holds a bachelor's degree in business management and a master's in accounting. So welcome to the show, Ramit. Thank you so much for joining us.
Yep, thanks, Venky. Thanks for inviting me. It's my pleasure to be on the show.
Yes, it's a pleasure to have you. And although you work and practice in America, I believe you are in India right now. So it's very, very early, 3:30 in the morning for you. So thank you so much for taking the time to join us live and speak with our viewers. So on that note, Ramit, there's been a lot of questions around the PPP program, right? Some people applied and got approved in the first wave, and then the government came up with the second wave, and this time around it didn't get used up within 24 to 48 hours. It's lasting a little longer because I think they're going through a slightly more stricter approval process. So tell us about that, please.
So Venky, what happened in this stage was that the government and the legislators smartly kept some of the money, close to about $60 billion for community banks. So $30 billion was reserved for banks with less than 10 billion in assets, and 30 billion was reserved for banks between 10 to 50 billion in assets. The other thing that happened was that on Wednesday, the banks, the SBA, only allowed approval for smaller lenders that had less than $1 billion in assets. So that also played a big part in not letting the funds get over very quickly. And the third point was that the SBA banned all robotic submissions, the RPA submissions that were happening by the large lenders. So that also helped in sort of extending this program. And they're now forcing, they're not giving the big guys advantage over the small guys this time. So all those things have really helped in sort of prolonging this program. The demand, I would say, is still there. There probably would be a third round as well, but I still feel that there are a couple of days more left in this second round right now.
So when you say a couple of more days, is it excluding the weekend or including weekend days, Saturdays and Sundays?
I would say including weekend,
So they are working literally 24/7 in receiving applications and approving them at the spot.
Yes. The banks are working 24/7. The fintech lenders are working 24/7. Biz to Credit through its lending subsidiary. We are an approved PPP lender as well. So all our staff, all our team members are working 24/7. So we are trying to help as many small business owners as we can.
So help me understand here. When you say you are the PPP lender yourself,
yes.
You operate like a bank. You lend money yourself, or you take it.
So what we do is that Biz to Credit historically, we have provided working capital solutions to small businesses. So in this PPP program, the SBA and the US Treasury allowed some fintech companies like ours to be approved as an authorized PPP lender by the government. So we are helping small business owners directly now, to basically apply for these loans and get funded.
Oh, fantastic! Now, there have been a few questions that I got from our viewers last week that, are some small businesses have, maybe one or two W-2 employees, but another two or three people on 1099. Are
Yes.
1099 contractors eligible to come under your PPP application?
So 1099 contractors have to apply on their own. They're not eligible, like if a company, let's say Venky, you run a company and you hire 1099 contractors, you cannot count them as part of the wage bill, as far as I know. You can
Okay.
only count, the W-2 workers, and the 1099 employees have to apply on their own.
Down the road. Okay.
Yeah.
Now, what about the owners? Let's say it's a two-member LLC, right? It's a partnership LLC,
Yes.
and they're not on W-2. The owners, they just draw money from the business.
Yes.
How do they report that, or how do they show that to apply for the PPP?
So they would have to get their 2019 tax returns. They would have to either get a Schedule C for the 2019 tax returns, or they would have to, get their 2019, LLC or S corp returns, and just show that how much are the distributions that they're taking from the business, and then based on that, they would potentially qualify for a PPP loan based on that.
Okay, so what if there is a company, let's say I own a small business and I did not file my 2019 taxes, I filed for an extension right
Yes.
before COVID came about, and I haven't filed it yet.
Yes.
In case I'm not eligible?
So basically what you have to do is that even you have to get your 20, the way I understand the program and my understanding, I just want to put a caveat out there, but the way I understand the program is that, you have to have your 2019 returns prepared, even if they're not filed right now, but you have to certify that you're not looking to change these returns or, switch them over, once you sort of, apply, because there is a certification from the borrowers that, all the information that they're providing is very accurate.
Okay.
And so I would just caution everyone that if you, declare something to be your income, then, it shouldn't be the case that you switch it over after taking the loan, because that can become quite risky.
It could be a problem. Now, if there was a genuine mistake that they had done, but they had submitted provisional returns
Yes.
and got the PPP approved, but then they had to go and fix some errors, would it put them in trouble, or is there a way to present it to IRS and show that it was a genuine error?
See, I think the IRS would be fine, but the problem would come from the SBA, right? Because you're certifying to the SBA that those numbers are correct.
Mm-hmm.
So I would say that there's no point taking the money if you cannot certify that the numbers are true and correct.
Got it.
Yeah.
Okay. Yeah, because I know of some small businesses that are really struggling because the tax returns are not ready yet, but the PPP money might just vanish within 2 to 3 days.
Yes.
By the time they get the tax returns done, there won't be funds available there. But you're saying there could be a third wave.
Yes, that is what we are hearing. There are no guarantees, but what we are hearing is that there's so much demand. The demand is more like $1 trillion. Until now, the funding that has come through is only about 660 billion. So there is definitely a third wave coming.
Okay, that is at least a little bit heartening to hear, and hope it really comes through.
Yes.
Now, what are the other things you're seeing in the existing applications that you received? Is there something that you're noticing that people are doing wrong or people are doing right, for those who did get approved and got the money, and for those who did not get approved?
So I would say a lot of people don't have their payroll records in order. What they need to focus on is, what I've seen most of the banks, because we have also been referring customers over to banks, is that the banks are looking for the 940 report. They want to match your gross wage number to the 940 report, and if you have health benefits and other expenses, then have that ready to provide it to whichever PPP lender you're going to, because they would need to verify the amount of health benefits, retirement benefits, that you have provided to your employees, and then also have a computation of any employee who's making more than $100,000, because any wages paid over $100,000 are not eligible to be included in the PPP program.
Oh, is that right? Okay.
Yes.
So any employee that you file for a PPP is someone who should be under $100,000 annual income?
No. So basically, let's say if your wages are 150,000, so you would only get credit for 100,000, not the 50,000. So if your wages are $80,000, then you get credit for the full 80,000.
Okay.
So it is up to 100,000 for all the employees.
And that's for employees on W2, not for owners or partners in the business.
Yes. Yes.
Okay. Another question, Ramit. Ramit, is if the company is in the US, it's a small business, but it is a subsidiary of a foreign company, like based out of let's say Singapore or India.
Yes.
How do they position themselves?
So that is still a gray area that we are also trying to get clarification on, because some people have said that that is allowed. Some people are saying that is not allowed if there's a foreign ownership. That as long as the principal who's authorizing is a US citizen or a permanent resident, it should be fine. So we are still trying to figure it out because there are no personal guarantees. But I think that's a very good question, Venky. It's an important question that we have seen a lot, and especially for a lot of South Asian customers that we also have, that becomes an important issue.
Right. And like you said, if one of the principals, let's say there are 2 or 3 promoters or owners of the company, but only one of the principals is in America and he or she is a permanent resident, like a green card holder or a US citizen, then they're okay, they can apply, right?
I believe they should be okay, but all the customers or all the people listening to this program should check with their PPP lenders as well, because everyone is interpreting rules a little differently. So it depends on the bank, it depends on your lender, and the guidelines are still coming out. It's still an evolving process, and basically people are trying to get answers to all these questions. But what I understand is that if you have one of the owners who's more than 20%, who has more than 20% ownership, then that should be fine. But again, I would like to caution people to check with the SBA, check with their lenders, and figure out what is the basically how those different banks are treating it, and if SBA has come up with some new guidelines on this.
Okay. So Ramit, I just want to go back to one point you made earlier.
Yes.
For a layperson like me who doesn't understand what is a 940 or a 941, can you please explain what those numbers?
So basically, 941 is basically a report that shows your annual wage bill, that shows your annual expenses, the amount of the taxes that have been paid for those salaries and wages. So it's a comprehensive report, an annual report. 941 is a report that you file with the IRS for the payroll taxes, which is done on a quarterly basis. So the difference between 940 and 941 is that 940 is a calendar or an annual report, and then 941 is a quarterly report. And then what a lot of yes, and what a lot of payroll companies are doing is that for the PPP program, companies like Paychecks, which is a big partner of ours, or ADP, what they're doing is that they're providing customers with a summary of report, with a summary report that helps them put the numbers together to qualify for the PPP loans. So they make a computation of your state and local taxes, your gross salary bill, your gross wages, the health insurance paid, the retirement benefits paid. So they make a very user-friendly report. So one of the things that small businesses or people listening to this program should do is to call their payroll company and ask them if they can get a PPP report, a summary PPP report that would sort of help them apply for these loans and make their life a lot easier, because then they don't have to go through the 940, go through the 941 and try to figure out numbers.
Okay. All right. And then there is one thing I think in the PPP application, they're asking for an operating agreement for a company. What would that mean?
So an operating agreement, so if basically, it depends on your corporate structure. So if you are organized as a limited liability company, then a limited liability company is governed by an operating agreement. So let's say if you have one member or two members in an LLC, then the ownership and their, the capital structure or the corporate structure is decided by the operating agreement. And the operating agreement defines who can control the bank accounts, who can enter into contracts, who can sign for any debt that the company is incurring or entering into any new contracts. So operating agreement is a fundamental document. So if you don't have it handy, you can probably find a lot of templates on Google or on LegalZoom, or you can probably go to your CPA and or local lawyer, and he can provide you with a document, with an operating agreement document.
Okay, but that is a must. You can't skip that requirement, is it?
That is a must because a lot of lenders want to verify. Again, every lender has a different rule, but a lot of lenders are requiring operating agreements for an LLC or basically bylaws for a corporation, because they want to make sure that the person who's signing it, is part of, has ownership in the business, and it's one more form of doing KYC on the business owners, because they're trying to get the corporate owner organization documents to have it on file in case there are any issues, and that's like a basic document that you need for KYC.
Now, apart from all of these, when the banks look at your application and when they're going through the approval process, do they also have to do a credit check with any one of the credit bureaus like TransUnion, Experian?
So they might do a credit check, but what they're also trying to do is that they're basically doing an OFAC check, to make sure that there are no issues with the individual. They're trying to do an OFAC check on the company, that it's not blacklisted by the Treasury or the IRS for any money laundering or any other offenses. So those are the things that the banks are trying to verify, and so it's totally at the lender's discretion what they decide to do with that. But as far as I know, they're definitely doing the OFAC checks, the KYC checks, just to make sure that the person who's applying for the loan does not have any issues with money laundering or with any other financial offenses that are ongoing that could put the lender at risk.
Okay. And again, for a layperson like me, I know what's KYC, know your customer, but what is OFAC?
Yes. OFAC, I think it's the Office of Foreign Assets Control or Financial Access. I don't remember the full form, but it's basically a list that is generated by the Treasury, by the US Treasury, to make sure that people who have committed any money laundering offense or who have any committed any financial misdeeds, so they are probably listed in that list, and the banks are trying to make sure, or the lenders are trying to make sure, that you're not part of that list when you're applying for these loans.
Right.
Yeah.
Okay. I think we spent 20 minutes talking about the PPP, program. Let's switch to the EIDL for the next 10 minutes that we have on the show. So tell us a little bit about EIDL and where we are with that in the second wave.
So I know that the government has allocated another $50 billion for the EIDL program. The EIDL program basically goes up to $2 million, and the interest rate is 3.75%, and it's for a term of 30 years. So what it does is that it enables business owners in the disaster zone to apply for these disaster loans if they have had a loss of revenue or loss of business, so that they can compensate them. And basically, it's a long-term loan, unlike the PPP, which helps people, come out of this pandemic or a natural disaster or any other form of disaster that has impacted their business severely.
Now, you did mention the term for repayment. I didn't
Yes.
quite catch it. Could you repeat that?
So the term for repayment is up to 30 years.
30. Okay.
Yeah. And unlike the PPP, there's no portion that could be forgiven. So basically, if you get a EIDL loan, then basically you have to pay it over 30 years. Now, in this program, after the coronavirus, the government did introduce EIDL grants also of up to $10,000 that a lot of business owners have received. But then the business owners have also applied for this EIDL loan, which goes up to $2 million.
Now, these EIDL loans, is there any prepayment penalty if some company avails of the loan now when like 4 years down the line they don't need it anymore, they want to return it?
I believe there's no prepayment penalty, but still I would ask everyone to check with the lenders and the SBA. But as far as I know, there's no prepayment penalty.
Okay. Now, what are the guidelines in terms of how you can utilize that money from the loan? What are all the items that they can use that money for, and what are the items they should not be using it for?
So for EIDL, what I understand is that they can, use the money for business expenses, for running payroll, for making their rent payments, for making their mortgage payments, for making any repairs in case it was a natural disaster. In this case, there was no physical disaster for most of the businesses. So they can use that money to sort of compensate for the loss of revenue that has happened to them. And this is more like a longer term working capital that you're getting that you can use to restore your business. Let's say if it takes your business 6 months or a year to come out of this mess, so then you have enough money in the bank to sort of carry you out, for a longer period of time.
Right. Yeah. Actually, it's a very good initiative. Now, from a small business perspective, how does a company determine how much loan they can apply for or they're eligible for?
So typically, the way I understand is that it is typically a percentage of the revenue. That's how the SBA determines your eligibility under the EIDL program. So they would ask you for your tax returns, your financials, your personal financial statement. They also ask you the loss of business, the loss of revenue that has happened, because of this program, because of the pandemic. And so based on that, they determine the eligibility amount.
Okay.
Yeah.
So irrespective of how much you ask for, they will ultimately decide this is how much we are going to approve you for.
Yes. So the cap on the amount is $2 million. And then it's determined primarily by the revenue of the business, pre-pandemic. And then they're trying to figure out percentage of your revenue that has been lost because of the pandemic and coming up with a number that you're eligible for.
Okay. And the way a business would show that this is how much revenue they have lost is by showing the income they made in the same period last year. Is that how they determine it?
Yeah, so they're asking for, I think, 2 or 3 years of your tax return. So they'll look at the 2 or 3 year average and see how much revenue you did every year, and then see, based on the type of business you have, how much revenue you've lost because of that. Because if it's a hotel, then they're going to have a major impact because they've been shut down and they would probably not open for the next 3 to 4 months. Same thing with the restaurant. The restaurant, even if they've shut down, they've been completely shut down for the last couple of months, and if they open, still their revenue would be lower, much lower, because a lot of people would not come there for dine in. It would be more takeout and delivery. So those are the things that people have to, that's how the business eligibility is determined. And restaurants or hotels sort of have more urgent need compared to, let's say, some of the other businesses. I know a lot of listeners to this program might have IT companies or might have services companies. So that segment has not been that badly impacted, unlike a restaurant or a hotel.
So Ramit, we only have 2 minutes left to go. So I'd like to wrap this up with your closing thoughts in terms of what you'd like to tell our viewers and how we can, if anyone wants to reach out to you, how they can get you?
So basically, I would say the clear message is that we only have 24 to 48 hours left in this program. So if you still haven't applied for financing, go ahead and do it under the PPP program, because there's not much time left. I think it's a very good initiative from the government, because it helps you retain employees and pay for your other expenses. And then if someone wants to apply on Biz2Credit, they can go to biz2credit.com and apply for a PPP loan. And I'm pretty accessible. Like, people can find my email on the website, and directly email me as well if they have any questions regarding this program. Yeah.
All right, Ramit, thank you so very much. This was very helpful. You gave very crisp and very clear answers to all the questions that we had. Thank you so very much. One more time, this is Ramit Arora of Biz2Credit. So you can always reach out biz2credit.com website, and you can reach out to Ramit. Thank you so much, Ramit, and we'll send you questions if we get anything in the future.
Okay, thanks, Venky. Thanks for inviting
me to join us.
Bye.
Namaskar. This is Venky taking leave from Sakshi on the Fun Factor Show.